Okay, in that case, as is tradition, here at High Noon Highlights at the very end, I like to go over our current positions, the current indicators that we're looking at, and also the current trade plan. Okay, let's start with our most important indicators. Okay, New York high low. All right. From what it looks like right now, it does look like we're going to be either flat on the high low, or even maybe we might even venture into the negatives. We saw the first setup. The first moving average went above the second. The 4 EMA went above the 9 EMA. Of course, I said it's not really a positive signal unless we curl up over all moving averages, including the 20. That hasn't happened yet all year. Okay, so if it comes back down, well, then we start seeing a pattern like we saw in like in March, April. Okay, so that means the bear market's not over. If we don't see that curl up, it means the bear market's continuing. Okay, so that's why I've been saying for the past few weeks, ever since June, I've been saying I'm neutral with a slight bearish bias. Okay, I've been saying that throughout this whole bear market rally. All right, and this is the reason why. Okay, another thing, corporate bonds. This is something that I posted last night. I said this is a very important indicator for risk assets as well. We were very close in putting in a bullish signal on our corporate bond AD line. Okay, if it was a positive 25 yesterday, that would have put us at a higher high on the junk bonds AD line that was made on the higher last high was made on June 2nd. So we would have been above that if it was plus 25. Instead, we got negative 198, so it pushes it back down. With HYG down about 0.5% or more, that would probably mean that we still keep going down. So 2 or 3 more days of that means we made a lower high, which means bear market continues. Okay, so HYG right now, if I go back to our charts. All right, HYG right now is falling. All right, and I think if HYG closes under like 77.95, I think that is a bearish signal. Okay, we're gonna start seeing the liquidity sensitive parts of the market underperforming, which means triple Q and IWM. Triple Q and IWM will underperform if we, I think, close under this 77.95 for the day. Okay, TIP TLT, I can't stress this enough. I don't know how many times I've talked about this today in the last few days. This has been our leading indicator. CPI, PPI, all those numbers, those are 3 months. They look 3 months back. All right. TIP TLT is forward looking. All right. This is what we're using right here. All right. This is what we're using. All right. So I think that goes up. If DBC and the rest of the commodity space goes up too, then well, yeah, we could see this breakout really sustain, and I think it's tracking DBC. Last week I said it was tracking gasoline, but I think DBC is it's an indicator of the indicator. It indicates where TIP TLT may go. I think it leads it just by like a couple sessions actually in some instances. So I'm going to use DBC as my comparison to TIP TLT. And kind of as a lie detector test for TIP TLT. All right. So that's what I see. ZF, also another indicator. I told you guys, if this goes down, dash for cash. If this goes up, trash is cash. If this is going down, risk off. If this is going up, risk on. So, we are seeing the dollar going up. It is over its 18-day moving average. Will we see it make come back to its highs here? Definitely possibility. And if that does, more headwinds for indices, more headwinds for risk assets. Anything priced in dollars will most likely take a hit. Most risk assets will take a hit if the dollar keeps going up like this. All right. Euro USD. This is a risk-on currency. If this is coming down, it's going to be risk off. All right. So just keep that in mind. Those are some of the indicators that I'm looking at. All right. The plan, nothing has change for our crypto plan. Again, ETH. I'll get into ETH, when we get to around that 1200 level or so. Oops. Around that 1200 level or so. I might start venturing in, especially if if our ETH to gold chart gets to that red line by that point. If it gets to our red, TradingView always cuts my lines, but they always take out my lines. But I had a red line going here between the ETH and gold ratio. And if it hits there around that 0.6 or so, I think ETH will probably be around 1100 to 1200 at that point. And that's where I'm going to start nibbling long on Ethereum. So that hasn't changed, okay? HUT, it is coming back down. I do have some shares. I have some covered calls on this. So I do invite a little bit more down movement so that I can get out of those covered calls and buy some more shares. I have an alert at 165. I will start buying more at 165. Also, Ford also coming back down, although very slightly. I want to see a major pullback here, 1380 or so. That would be a good entrance for me. Still part of the plan. PPC getting ever so closer to our buy level. I do want that 2 standard deviation Bollinger Band. Right now, that 2 standard deviation Bollinger Band is at 2887. Okay, so that is where I'm going to start nibbling long on PPC as well. Okay, SPY and the indices. Okay, I'm not going to do any more put buying. What I will do is I will start buying once we get to, so either we get to our lows of 360 or I see our Moab signal, the mother of all by the dips, which I'm not seeing yet, The mother of all by the dips would be if we saw the New York high-low line, remember, going up over that 20-day moving average and then making a higher low, as well as our junk bonds AD line making a higher low, a higher high, as the market drops. We're not seeing that. It can't even make a higher high yet. The junk bonds AD line, I just went over that, can't even make a higher high. New York high-low line, cumulative, it can't even get over its last moving average. So we're nowhere close to that yet. All right, we're still weeks away if that even happens at all. All right, so either we get that signal or I start buying in at 361. I will start buying even more shares of SPY at around 341, 344 or so. And if it goes under 340, I will be buying in the money calls for about a year out on SPY. Okay. The current positions and that I still have my UVXY call spreads of 14.24 long the 14, short the 24 calls. Also the 15.20 call vertical debits, long the 15, short the 20. I'm still in the QQQ put vertical spreads for November. I'm in the November 305, 295 put verticals, long the 305, short the 295 for November. Okay, IWM, I'm still in the 180, 170 put vertical debit spreads, long the 180, short the 170 for both the November and the October expirations. All right, nothing has changed. Okay. One position, though, that did change, that I didn't even realize until this morning that it actually went through, was actually on the Eurozone spreads. I'm still in the spreads, the 32.27. However, yesterday, I had some stink bids. I call them stink bids because they're just like low, really, really low bids that have a really low chance of hitting. So I had an order to buy back 27 puts at 25. No, it was at 20 or 25 or something like that, and it triggered. It triggered only a partial of them. I think it got in just under 25. It was like it got in at like 24, 23 or something like that. I had some orders in there, and it filled a partial. So part of my 32 puts that I'm long on are naked. Okay, so if this really drops, I can stand to recoup more of my losses and possibly, profit even more. So I still have a few short 27s, but not as much. More than half are now just long 32 just on their own, and then I have a few the 32 27 put verticals. Okay, so but I'm still mainly in the position. I'm still short on the eurozone, ETF. I did not lessen my position. It's not like my position got smaller. If anything, my position actually got more delta to the negative exposures. So I now have more delta exposure on the downside because of that. So it's almost like I got even more bearish on Europe. Okay, but it was a stink bid and it just went through. I didn't even notice it until this morning. I think it went through yesterday. But anyway, back to the current positions. EWT, Taiwan, December's 49.40, long the 49, short the 40. I'm still in those put vertical debit spreads. DIA, Dow Jones Industrial Average, of course, I'm still in it. I'm still in the October 300 and 290 vertical debit spread. Long the 300, short the 290. Boom. That is all of it. All right. Positions, indicators, trade plan, checkmate trading. Any questions, comments, rude remarks?